Hello everyone, welcome to Bida FX beginner class. So in this tutorial, we're going to walk you through from the basic to the challenges level on how to identify markets in real world. So we are not only going to limit our knowledge in FX, we are also going to touch some of the parts on cryptocurrency as well, since crypto is our main topic before. But for now, we for the sake of beginners, I am going to introduce you a step by step and give you some theories, and also we are going to dive into practicals way. So without further ado, let's get started. So after this tutorial, you should be able to analyze and see the market, how the market move, not only the crypto alone, also in the FX. Now, what is forex trading? Forex itself, what is forex? The forex itself is let's say foreign exchange, and is a process of buying and selling currencies pairs to make a profit. And as you can see, forex is one of the most largest and liquid financial markets in the world, with over $7 trillion traded daily. So, as a traders, we always speculate on currencies price movements, such as maybe, for example, now we speculate on the movement of the price that we predict after we are done with our analysis. We predict a pairs that we are going to trade against each other. For example, we said Euro USD or Euro JPY. We buy Euro using the we buy JPY using the Euro. We buy you buy Euro using USD. So that is how it works. And we believe that if we buy after our prediction, if we buy, the market tend to move up in our favor, we are going to be in a profit. And if the market move against us, we are going to be in losses. That is how forex work. Buying of currencies pair. For example, now you want to travel. Let's say you want to travel to Canada, and you have you have you have your foreign you have your local currency. When you reach airport, you purchase for maybe USD, or you purchase for the other currency, the Canadian dollars. As the current price, let's say Canadian dollar plus USD, one USD. Let's say you already have your USD. You bought USD first, which is United States dollar. You have maybe 5 USD, and you went to buy Canadian dollars with the USD you already have at hand. After buying the USD at rate of maybe $1 is equals to 1.30 USD. Now, 130 USD Canadian dollars. So when you reach Canada and you check on the market again, you check the price, the 1 USD that you bought from your home country at airport, you notice that the price has increased when you still went to the airport again over there, that you want to buy another USD, and they tell you that okay, you are going to get $1, 1 USD equivalent to one 1.24 Canadian dollar. Remember, by the time By the time you bought, it was 1.5. That means the currency has lose its strength. But when you went there and they told you that they are selling it at rate of 1.40 or 1.45, remember you have gained some profit. So that is exactly how FX work. You buy and you intend that the price will move up or the price will move down depending on your analysis. And once it goes in your favor, you tend to make a profit. So now, how the forex market actually work? The forex market operates 24 hours a day, 5 days a week, and is decentralized, meaning it doesn't have physical location. Instead, trade trading takes place over the counter, which is OTC, via the electronics network between banks, institutions, brokers, and individual traders. So those individual traders are like you and I. We are the individual traders. We have the banks that traded big money, big boys. So the market is divided into three main seasons in a day. In 24 hours, the market is subdivided into three major seasons. We have the Asian season, we have the European season, and we have the New York season, which is referred to North American season. So in each and every season, we have the currency pair that move. Not all currency move in a particular season. For example, now in Asia season, if you want to trade and enjoy your trading in Asia season, you tend to trade maybe NZD, JPY, all these pairs, which we are going to discuss later. In the European season, we tend to trade Euro USD, GBP, pounds, and etc. like that. In New York season, we tend to trade like the USD JPY, USD, all these currency attached to USD. So each currencies has their specific time, but this doesn't mean you cannot trade at any moment. But it depends on the basic time, the rates, how the currency pair move is quite different from the the way it will move on the Asia season or European season. So that is how you need to you need to learn some of these things for you to understand the market and see the market very clearly. So I believe that we all we do is to trade gold, 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 gold. No. As a beginner, I will advise you not to trade gold alone. Do not trade gold. I am not saying you should not at all, but as a beginner, if actually you really want to learn, you should avoid gold at a beginner. You should be trading something like Euro USD and GBP JPY, um, uh, all those pairs, not instruments, not gold as instruments. So each pair represents how much the quotes currency and the first one, for example, now when we say Euro USD, we have the quotes and we have the base. So 1 unit, for example, now Euro USD, let's say Euro USD, Euro USD, Euro, Euro USD like this, Euro USD, USD. So this first one that's attached to this first one is called the base currency. And the second one is called the quotes currency. We use this euro to buy the USD. The first currency is the one we use to buy the base and the quotes. For example, now let's say if 1 euro USD is 1 euro USD 1.10. Now it means that 1 euro one euro like this, it's equivalent to $1. It's 1 euro. It's equivalent to $1.1, which is 1.10 $1.10. If I have 1 euro and I give it to you and I want to make an exchange, you are going to give me back $1.10. That is how it works. So now let's proceed. How the profit is made. As a trader, we aim to buy low and sell high, or vice versa. Like I said earlier, I said if I buy the currency, if I use euro to buy dollar, I intend that the price of euro is going to increase. That is why I use euro to buy dollar. And once the price increase and I sell back, I intend to make I intend to make some profit. For example, now Euro USD, I bought it at rate of 1.1000 like this. And at the time the market moved up in my favor, I decide to sell it back at 0.1050. So now, these little differences, this 50 cent here is my profit, and it's called pips. So we are going to dive into it later. But this is just the 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 walkthrough. So who are the participants in Forex? So there are several keys. There are several keys that make up the Forex market. First, we have central bank. So those central banks, they are, I think they are the major, they are the major people that move the market. They are the one we call big boys in the market. They influence currency value by setting interest rates and monetary policies, e.g., the Federal Reserve, the European Central Bank, and etc. So I believe we are going to learn that later, but it's just we don't need to go dive into this not to waste our time. We have the commercial bank and financial institution. We have the corporation. We have the hedge fund and investment managers. We have the retail traders, and the retail traders are the where we classify into as a trader. You and I, we are retail traders because we are the individual that trade through brokers using trading platform like MT4, MT5, and other instruments like that. Other instruments like that. So the currency pairs and how they work. So I believe with this basic introduction to FX, we should be able to understand and know what exactly FX is. So in our next tutorial, we are going to walk you through the currency pair, the type of currency pair we have, and how it's being traded. So see you in our next tutorial. Peace.